Today's podcast is a little bit different. I had originally planned to visit with one of my valuation heroes, Chris Mercer of Mercer Capital. When people talk about thought leaders, these days they throw that around that they're a thought leader. Well, Chris really is, and he has led the business valuation community for years and years. I wanted to talk to him about how to increase business value and how to help business owners make saleable companies. Well, at the time of this recording, this is March 23rd, we're knee-deep in the middle of COVID-19. And so rather than talk about how to increase value, we're just going to talk about how to maintain value in crisis. So I hope you enjoy my conversation with Chris Mercer of Mercer Capital.
Please welcome.
This is another episode of the Defenders of Business Value podcast, a podcast where we talk about what makes a business valuable, learn the tips and tactics to increase your company's value that only veteran deal makers know. And now, here's your host, Ed Meisogland.
I'm your host, Ed Meisogland. I help business owners understand how to build value and identify and remove risks in their business so that one day they can sell their business at maximum value when they want, how they want, and to whom they want. And it seems funny to say that today on this recording of March 23rd. I have one of my valuation heroes, Chris Mercer of Mercer Capital. For anybody that's been in the valuation community for any period of time, recognizes his thought leadership. And these days, people throw it around as an adjective. Well, Chris is truly one of those guys that has been in this community and has led this community for so many years. So, Chris, welcome to the show.
Thank you, Ed. It's a pleasure to be here. I wish that the times were a little different than they are, but we're living at the time that we're living.
Well, the good news is that we're living, and that's the important thing. I gave a little overview before you got on about you and Mercer Capital. Can you kind of give just a brief overview of you and the services that Mercer Capital has been providing all these years?
Sure. Well, I've been in the business appraisal business since 1978. I went into business at Mercer Capital in 1982, and we've grown over that period of time to where I think we're one of the larger independent firms in the country. We've got offices in Memphis and Nashville and Dallas and Houston. And we provide valuation services for a broad range of companies and for a broad range of reasons. Gift and estate tax purposes, financial reporting purposes, employee stock ownership plans, buy-sell agreements, and then people, of course, fight over money, and litigation is an area where we've lived for a long time. Like I say, the company, we have significant resources. We have one of the largest single valuation offices in the country, maybe the largest in Memphis. We've got almost 30 people there. Most firms don't have that many people in one place. But we've been at it a long time, as you pointed out, and it's been a good ride.
Well, I'll tell you, when I was younger, and I'm talking 25 years ago, my plan was, I would get my chops up here in Indiana, and I would land in Tennessee, and I would go work for Mercer Capital, because that was just kind of where that was the pinnacle of investment banking and valuation. So, what a wonderful company you've built. As I was telling you, I had a script. I had all my questions laid out on how to increase value of a company to make it more valuable to sell down the road. And if you don't mind, I'm going to go ahead and pivot into three areas that you've taught about for all these years. The first one is valuations based on three things. You've always taught about risk, about earnings, and expectation. So we're in the middle of this crisis. So why don't we attack each of these three and figure out how to help business owners either stay afloat or at least preserve the value?
Sure. Well, the value of business is present value of all the expected future benefits, that is the cash flows from the business, discounted to the present, risk-adjusted discount rate. And that's sort of an overview of the discounted cash flow model. What we have in today's environment is heightened risk. I hope that The reaction in the marketplace in recent days is a substantial overreaction, and that sanity will prevail. I was around for Black Monday, which was in October of 1987, when the market dropped maybe close to 30% in one day. It did come back within a few months, and it continued on. But cash flow is key. In every business is going to have to, during this period of time, focus on either conserving cash or generating cash, or a combination of those two things. If you're in the restaurant business and the state has closed you down, there's not much you can do except perhaps take out and hope that that'll pay some of the overhead and keep a few of your employees in business. If you're in the airline business, you're just slowed down. If you're in the car rental business, you're probably slowed down. And businesses, Ed, you don't even think about. I went to laundry to pick up something on Friday, and I noticed that they had shortened their hours. And the lady said that in the last week, their business had just dropped to almost nothing, because when people are staying home, they don't need dry cleaning.
Yeah.
But if you think about the impact on so many different kinds of businesses, and they're all trying to do either to generate cash or conserve cash, because that'll be the key to coming out on the other side. It's hard to talk about the growth of cash flows at this point. A business like our business, we have 45 people, and normally we have 4 offices, and we know where everybody is, and it's easy to communicate with everyone. Today, we've got 45 people in probably 45 different locations.
Yeah.
I'm in Florida. Others are working from home, and we're trying to figure out this new reality, how to stay productive and optimistic in a time when, if you read the press or listen to the news, my gosh, the only thing you can do is get depressed.
Yeah.
We had a pep talk this morning with our folks about the fact that you're not alone. You may think you're alone, but you're not alone. You're working together. We'll get through this. We've gotten through every other crisis before now, and we'll get through this one. And I think business owners have to kind of take that attitude. It hasn't hit some people yet.
Yeah, well, I'll tell you, one of the things that concern me is these baby boomers that had some gas still in the tank. So they hit 65 and they're like, you know what, I'm still relevant in this business. I think I'm going to keep going. And so now we're starting to see the influx of more motivated baby boomers. So now I'm talking 6-7 years ago. So now they're at 72, 73. And now they have a real big problem when this thing is hit. So what do we say to those people?
Yikes.
Yeah.
Well, what you say to people that are, if you will, past their prime in terms of selling their business, you better work with your team right now and focus on preserving the business and rebuilding the business, because you won't get another chance.
Yeah.
When this rebounds, all of that pent-up demand is still going to be there. There'll still be a bunch of money chasing deals. I believe there will be.
I do too.
And so you got to get to the other side. And I don't know if this is a 2-week deal or an 8-week deal or, a 12-week deal. But every virus that I've heard of so far runs its course. Yeah. And this one, too, will run its course. And my suggestion is that if you're in that older baby boomer group and you still own your business, you better be focused on your young people, and you better be focused on making sure that they are working and happy with the business, because, like I say, you won't have another 5 years to sell it.
So normally we can explain situations like this as a non-recurring event, and it amplifies risk a little bit, but we can explain and say, all right, this doesn't happen very often, and we can discount, the event. I don't want to say in its entirety, but you can make that argument. But how much of an impact on value will something like this have? If I'm a business owner, can I explain this away as a non-recurring event, or do I now have to really dig in and take my lumps when they come?
Well, it is a non-recurring event, but life is, filled with one non-recurring event after another.
Right.
This virus and the panic that is surrounding it has taken away, a third of the market capitalization in the U.S. markets in a very short period of time. It would be naive for me to think that that wouldn't have an impact on a typical business, if there is such a thing, on Main Street. So we as a valuation firm are attempting to figure out how to address valuation in this light, because it's not like we can fast forward to the end of 2020 and then we're looking back on it. We have people doing deals right now, and
right.
We have to be talking about valuation right now. This is going to impact a lot of people. It's kind of counterintuitive. Treasury rates are down at such a low level that would infer that, other things being equal, that value would be up.
Right.
But value is not up. Value is down. And value is down because of that thing called R, risk. And that risk is, all you have to do is drive by and look at all the restaurants that are closed, drive by and look at all the bars that are closed. At least the Florida governor has not seen fit to close the liquor stores yet. So
Sure.
He's avoided pandemonium, I suppose. But there's less traffic everywhere right now. And people are just kind of hunkered down. And as business owners, we're all trying to figure out, is the phone going to ring again?
But from a risk standpoint, can't you explain that this heightened risk is as a result of a non-recurring event? So why do we need to panic from a risk standpoint? Because I do believe that a lot of this, a lot of chinks in the armor just got amplified. And now if you had a little problem in your business, you now recognize that you had many other problems that were just lurking under the surface. So my question was, why can't we explain the risk away? Because when we do come out of this in 8 or 12 weeks, every business owner is going to look to, how do I get my value back? Or did I really lose my value? So what do you do with that?
Well, number one, you do the best thing that you can do right now to generate cash and conserve cash. Number two, you do everything that you can to make the numbers of your business look as good as they can under the circumstances. When we look at this next year, let's hope that performance has come back. Maybe a year from now or 2 years from now, we can look back and say, oh, yes, that was the COVID-19 scare. And, we've recovered from that, and value ought to be there. Keep in mind, some other things are happening. There's a lot of deleveraging going on right now as people are trying to find sufficient liquidity to stay in business. And the banks, financing is going to be considered riskier for a while, and I think financing is going to be a little harder to get. So until we get through and see what happens on the financing side, we really won't know about value. But my guess is that 2 years from now, if we look back, the value of smaller businesses, private businesses that you work with, that we work with, and bigger private businesses will be back to, quote, their normal levels, pre-COVID-19.
Well, but when, the access to capital, the capital that you're referring to, are you talking private placement capital, or are you talking conventional financing or SBA financing? Because I don't know if they passed the, $1.4 trillion stimulus bill as of now, but it seems as though they're doing everything that they can to stimulate, capital.
Right. The federal government, I don't think anybody who's right thinking really wants a deep recession right now.
No.
And I think what you're seeing in Washington is a massive effort to stimulate the economy early before it has a chance to go too much in the tank. And if those stimulus efforts work, then the recession will probably be short and not so deep. In the absence of that, you're talking a world economy that has changed. The suppliers in the Far East have been backed up. People that I talk to say that their Chinese and other suppliers are coming back on stream now and maybe back on stream soon. But we haven't even been hit with all of that yet. I'd like to tell you that we're at Mercer Capital, we're experts in, working remotely. But this is a new deal, and we're like
us
everybody
too.
We're going to have to figure out You got to figure out, how we're going to do business.
Yeah.
Just the basic things like keeping staff productive, keeping staff motivated. It's much
Totally.
harder if you can't see anybody.
No, I mean, we went and dragged everyone into the Zoom environment where, and now we're meeting, daily, just as a huddle. And we've been pretty blessed by following some of these startup companies and, what all they're doing in order to stay connected to their, millennial workforce. And that's the playbook is, somehow, some way they're able to virtually reside. As dark as this period is, that's one of the blessings I think that we've seen is some of the ingenuity of some of these companies to figure out how to preserve their corporate life. It is really fascinating to watch. And I know it's painful for them, but I went to the butcher shop and they had, in their waiting area, they had measured out 6 feet and had little X's, and you just followed the X's. You couldn't touch the windows. You had to stay 3 feet away. And I mean, it was just, you felt okay going in there. And, and it's those kinds of things. So, yeah, boy.
You take that exponentially. And what business owners are going to have to be doing is focusing on every aspect of their business so that, once again, I've said it 3 or 4 times, generate cash and conserve cash, because cash will be the determinant as to who comes out on the other side. If you run out of cash, it's pretty hard.
Yeah.
I mean, it's hard to depend on a government bailout for a small business.
Yeah, I keep seeing that, at least on the micro and the smaller businesses, south of 25 million. I mean, we're seeing daily things coming from the SBA about help and immediate help. And I don't know whether that's a good thing or a bad thing, but I do know that, and this is what we've been telling all of our sell side clients, is, good businesses sell in any economic climate. It's like you said, it's true. I mean, if you've developed a business, this is a speed bump. It's not the end of your business. And if you need to take it off the market and wait it out, then you'll be fine too. But boy, it is an interesting time to be a small business owner, trying to fight this and not knowing when it's going to end. I think that's the biggest challenge.
It's huge.
Yeah, it is. One of the things that I had heard was, as a result of the China shutdown, it forced a lot of companies to look for alternative sources for manufacturing. And it appears that India may be becoming more prevalent in the manufacturing space. I don't know, have you guys heard any of that? And again, it just may be speculation, but I just thought I'd ask that you guys, Jason.
Well, no, it's a logical thing. I mean, India has been very heavily into business services support for American businesses for a long time. I mean, I think it's only natural that they see the opportunity with the shutdown and confusion in China and are attempting to get some of that business in India. That'd be an interesting dynamic.
Yeah. So we talked earnings. We talked a little bit about risk. Where does the threshold of risk lie now? And I know the development of discount rates and so on and so forth, and you may want to give your quick primer on that. But as you develop a discount rate, I mean, is this now the risk embedded in the company specific risk, or where is the risk lying? Because it seems it's everywhere.
Well, the traditional buildup starts with some measure of long-term treasuries. You've got an equity risk premium. That equity risk premium, many people have been saying it's in the 5.5%, 6% range, 5% range, in that range. And that risk premium sometimes gets adjusted by beta. Well, I think right now the equity risk premium is huge. I mean, because that's the only thing that can explain, at least for the short run, that's the only thing that I can see that will explain the downturn in market prices. The interesting thing about it is that, the weak are going to get weaker, and I think some of the strong are going to get stronger. Walmart and Amazon are hiring.
Yep.
And they're hiring at the expense of Main Street businesses who may not have the capital to make it.
That's interesting. Yeah, I didn't look at it that way. You're exactly right, though.
But right now, call it a bubble, but the bubble is real. If you look at the stock, if you look at the stock prices, the stock market right now, the futures were down this morning, and then they came back. I don't know where the market opened. I haven't had a chance to look, but it's just one more day of uncertainty while people try to figure out what is going to happen and who the big losers are and who the big winners are. It's just a very strange time. And the backdrop of all of these, with all of those boomers you're talking about, is that they probably lost 30 or 40%.
Right. That's where I was going.
Of the value of everything else that they've accumulated, if they're exposed to the market there. So it's really a double whammy for a lot of folks.
Yeah, and that's where I was going with this, is that, you know, where all your wealth is tied up in your business, and even if you were taking chips off the table over the last 5 to 7 years, yeah, those chips just evaporated, or at least a lot of them did, and so that leads you to what? You know, what do you take the discount, as you're saying? I mean, you're not going to get another crack at this. You may want to take what you can while you still can.
Right. I don't think I'd be trying to sell a business for the next 3 months. If it's in the process of being marketed and people are already talking and halfway committed, that's one thing. But it's buyers are aware of what's going on in the market as well.
Sure. You're right.
They've seen the same stock market that we all have.
Well, and that leads to, you know, what do you do if you're knee deep in the middle of a deal? Because if I'm a buyer, I'm taking full advantage of this. This makes your business more risky, or this, you know, it gives me chance to pause and say, you know what, let's just table this for 90 days and let the storm go by, and then we'll revisit it. And, you know, you've been in the business long enough to know that time kills all deals. And, you know, that seller does not want that buyer to walk away, because chances are they're not coming back. So, you know, how do you offset something like that?
It's very difficult to offset.
Right.
You know, I said one time, and I wrote it down so I could quote myself, if you wait until it's too late, it's too late. And
right.
That's what I think a lot of owners do in terms of waiting to sell their business, or waiting to, if they don't sell it or get it under, you know, different management hands or a different arrangement, so that other people are benefiting and maybe they have less benefit. I think you're going to find some business owners that are going to be holding their stock, or holding a piece of their stock. They may have to give up some of their stock, you know, to keep people in the coming year or 2 or 3 in order to keep it all together. But that might be a whole lot preferable to, losing the team.
Yeah. Well, speaking of the team, one of the things that fascinated me with your practice is you converted into an ESOP, and I don't know how many years ago. And that was a first for an advisory firm like Mercer Capital, right? I had never seen anyone do, I've seen, obviously, various professional services like architects and things like that create ESOPs, but I had never seen something like an investment banking firm. Can you speak to that, and how did that roll out, and are you still pleased with that decision?
Sure. Well, we sold half of the company to the employee stock ownership plan on January 1, 2006. We took out a loan, 100% loan, to buy that stock. The ESOP did, or the company did, and loaned it to the ESOP, and paid it off in 8 years. The ESOP is, provides a valuable additional benefit to our employees. We still have a profit sharing plan and still make a generous contribution to the profit sharing plan, but we also have the ESOP. So folks have generated the value that's in the shares, but our ESOP is an S-Corp ESOP, and its contributions and distributions are not taxable. And so it is, in addition to the value of the stock, accumulated substantial assets that are invested, unfortunately, in the market.
Yeah, well, it'll come back.
So I think it will come back. President Trump yesterday was hopeful that it would come roaring back, and I do believe that it will. But the ESOP was a good decision for us. It's been very, very good. As a service firm, we generate cash flow, and we were able to service the debt, and now it's just an additional significant enhancement to the retirement plans of our employees.
Yeah. Well, like I said, Mercer Capital has always been one of those pinnacle firms out there that you just kind of follow along and hope that you can learn from afar is probably the best way to put it.
Well, I was just thinking about that business owner that you're talking about, and I guess my suggestion to them or him or her would be the same that I gave to our staff in a memo a couple of days ago, and that is that don't let the psychology overpower you. In other words, take charge of your attitude and be as optimistic as you can while you're working on cash flow, and get to the other side, and then do what you need to do in a very reasonable period of time. Because like I say, there probably won't be another chance for a lot of folks in that age category.
Well, my last question has to do with expectation. The forecasting of a small business already starts at next to impossible. So if I'm a buyer, how do I even begin to forecast this sucker punch that the target that I'm looking at just received? How do I take it from there? That is an enormously difficult thing. I think it will call for increased due diligence. I think it'll slow down the pace of deals, and it will kill a lot of deals. Certainly over the next 6 months. Yeah, because it's hard to take into account what might come out on the other side when you're in the middle of the market slide. Basically, all you can do is slide until you get to the bottom, and then you can begin to think about forecasting. But how would you like to forecast for a hotel right now, or for a restaurant? I'm valuing the company that owns a number of restaurants in resort locations. Whatever forecast they had makes no sense right now. Yeah, I'm in the same camp. I have a portfolio of restaurants, and what do you do? I mean, I'm trying to figure out whether or not in 6 weeks from now, are they even still in business? Do they want to be in business? So yeah, I hear you. I want to be sensitive to your time. Like I said, you have such depth and wisdom and have seen so many different things. I guess I'm hoping you have any parting guidance for those folks that are out there hurting and trying to figure out how to keep afloat. If I have any guidance, it would be to keep looking forward optimistically. I mean, the downside of being optimistic is nil. The downside of being pessimistic is great. So to the extent that you can affect your attitude, keep a positive attitude through this thing, it will help you get through this time period, and it will help you rebuild and put things back together when the market's a bit more favorable. Yeah. Well, Chris, truly, I'm so grateful for the opportunity to have visited with you. Like I said, you have made me a better appraiser, better deal guy. Thank you. And I'm just so grateful that you took the time under these circumstances, because I'm certain you guys are scrambling the way we are. So thank you for being a defender of business value, and I hope we can do this again under better circumstances. I look forward to that, Ed, for sure.
This was another episode of the Defenders of Business Value podcast. For more episodes packed with strategies to increase the value of your business, visit defendersofbusinessvalue.com for show notes, transcripts, and free tools to start you on your journey. Subscribe now so you don't miss any future episodes.